All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy, and it's great to see you. Thank you very much for joining us. Let's get through these markets. So you've got an idea about where we're at and where we might be going, right? You need some background, a little bit of reference. Let's give you the reference now. How about corn? Well, I tell you, it just wants to hang around unchanged. We've got D's down a quarter, 667 and a quarter, but March is up 3/4 to 669 and 3/4. So that spread is widening, right? And we've got May, July, and Sep all kind of hanging around. Well, May and July hanging around that unchanged level. So not a lot happening over there. Soybeans, let's take a look at soybeans, 8 1/4 cents higher in that Jan market. 14.25 1/4 is last. All right, so that's about what, a nickel from the highs. March is up 8 cents to 14.30 1/4. Moving over to wheat and that wheat market, what do we got going on there? Wheat is down 4 cents in Chicago. The Dees market is 8.02 3/4 last. March is 8.21 1/4 last, and that too is around 3 3/4 cents lower. How about the hard red wheat in Kansas City, the old HRW down in KC? That's 6.5 cents lower in the Dees contract to 9.31 1/2. March is 8 1/4 cents lower to 9.20 3/4, and these prices are brought to you by Bar Chart. Spring wheat in Minneapolis, let's talk about that. That's probably a little chilly up there right now, but 1.5 cents lower in the Dees contract to 9.52 1/4. March is off 2 1/4 cents to 9.59 3/4. And then last but not least, let's take a look at cotton. 98 points lower to 86.06. All right, let's bring in our next guest analyst, the venerable Todd Horowitz. He's with Bubba Trading. He's coming to us live from Vegas. All right, Todd, I mean, what's going on? I mean, where do you want to start? I've got about 180 seconds slotted for you. The floor is yours.
Well, Scott, actually, I wanted to talk about markets today in general. I mean, the markets in general are really lost and have no idea where to go based on volume and liquidity. We swing up. I mean, earlier this morning, the grains were pretty strong. Now they've weakened quite a bit and are back to flat, if not lower. The same goes for equities. We see this almost in every market, and I think it really has a lot to do with the general uncertainty of what's going on in the country right now. And I think that these are markets that are obviously extremely challenging to be a trader in, and also very challenging for those who are trying to hedge or whatever they're doing, because we really don't, it's really clueless which way to go. We know fundamentally that grain should be going higher, but yet they've been sitting in this tight range for, I don't know, weeks or almost months now. So it's becoming a much bigger challenge, but this is how markets do trade. And they're trying to find their direction and then price. And when they move, they're going to move fast, which leads me to believe the grains are moving up much higher, because I don't think there's a lot of room to go on the downside.
Yeah, I was going to ask you that. I mean, on this show for the last couple of months, you've been talking about the tightness in the commodities. And are you still in that camp?
I'm way in that camp, Scott. I think that it's only going to be bigger. I think that 2023 could be a boom for commodities in general. I mean, I'm talking about across the board. This has gotten so challenging and frustrating that we know that there's a demand for commodities. We also know that if money comes out of equities, it's searching for a home. And there's no better place than the commodity markets to go to once they do leave the equity markets.
Real quick, 60 seconds. The Fed's Bullard says that he sees Fed funds between 5 and 7%. Today we're at 4. What does that do to these prices if we start to see that come to fruition?
Well, listen, I think we're kind of in a replay of 07, 08, Scott, where we had all this stuff going on, and yet the market still tried to push higher. It's going to hurt everything. I mean, it's going to collapse the housing market. It'll help the commodities, actually, even though it'll be more input costs, but the prices will have to go higher because we're going to have trouble with shortages, and that's going to bring higher prices to the farmers.
Yeah, I mean, that's 2023 is already setting up to be kind of dicey is probably not the right word, but you're going to have to be really efficient with your marketing plan, because, again, these markets are pretty unforgiving. You make a mistake, you get punished, right? If you stay true, you'll do all right, but it's quick to punish you big time when you make a mistake. So we're going to go away. We need to pay some bills real quick here. Stay right there. Todd Horowitz, Bubba Trading in Las Vegas. We'll be right back after this.